Hey, hello and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen. Wednesday, the 10th of September, 2025. Look, the world is going crazy. Geopolitics is just all over the place. Look, we have some economic data sets which are coming out as well. Very important. So far, the market is kind of on the edge, I would say, because there's a lot of things coming out in the headlines. Look, about all this and a little bit more in the session right now, so hopefully you enjoy it, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday. Today is Wednesday, the 10th of September, 2025. Look, I am trying to arrange here that my computer wouldn't be lagging that much, but hey, I can see certainly that there are some little disturbances. Look, ladies and gentlemen, I hope you're hearing me and seeing me well, because like I said, it's just yeah, it's one of those days. It's one of those Mondays again. I know it's a Wednesday, but I had the same issue on Monday, basically, where the live stream for some reason is a little bit on the struggling side, you know. So anyway, look, ladies and gentlemen, I hope you're all, like I said, hearing me and seeing me well. Thank you very much for tuning in. I really appreciate that. And look, as always, we're going to talk markets. We're going to look at what's happening. The world is going crazy. So before we jump into that crazy world, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Just going to put the usual good morning in the chat room. Good morning, everyone. There we go. So yes, yeah, like I said, I hope everything is fine. I hope you can stream the video normally, okay, without any interruptions. Look, also, just before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So let me just, I'm trying to kind of clear up the you know, the visuals here. I mean, and clear up all the things in the background. It could be annoying here. Look, right. Ladies and gentlemen, without further ado, let's jump into the markets. And first of all, as always, the economic calendar. Now, let's quickly have it refreshed here a little bit. And today we're having some important data sets. Now, first of all, we got the, oh, why is it not updating here? There we go. Come on, China, show me your numbers. China, inflation rate month on month, 0% against the forecasted plus 0.1. So that's not a very good thing here. Year on year, it also dropped. So in a way, what's happening here is that on one hand, inflation, when lower inflation, yes, it's great. However, on the other hand, when you don't have inflation at all, then it's kind of a bit of a, it's kind of a bummer, because again, you're not seeing growth, economic growth. So there is growth, however, not to the extent where where you would like it to be. Now, anyway, for now, like I said, looking at the PPIs as well, they are better than the previous number at minus 3.6. So there is a little bit of improvement on the producer side, but certainly that's not the kind of the number that they would probably like it to be, where they would like it to be, because currently it's sitting in the negative zone. So if we take a look at what has happened before and how it kind of progressed further, let me just arrange these charts very quickly. There we go. So look at this. We have been in negative territory for some time now, and last time we were back in positive zone was back in kind of at the end of 2022. So for quite a while now, it has been in the in the negative zone, so which is, like I said, it's a little bit of a bad indicator here for China in a way. That said, China is making deals out there. We can see that U.S. kind of backed off a little bit from the whole kind of China trade, tensions and all, or tariffing, China. Because look, at the end of the day, you understand that China does have. It needs U.S. and U.S. needs China, so it's a win-win deal. You cannot really. This is the damage. This is the relationship that cannot be damaged in the way and should not be damaged. That's for sure. Anyway, but certainly we are seeing a little bit of a slowdown in Chinese growth. But again, it's not like really critical or anything like that. The housing market, of course, we know that the Chinese housing market is a little bit suffering, but hey, China continues to lower interest rates, but they cannot really drop them too much, otherwise they might spook the market a little bit. Anyway, look, in terms of further economic data, ladies and gentlemen, before I actually go into further economic data, can you just let me know in the chat if everything is okay, the stream is fine, like everything's coming through fine, you can hear me and see me well? Because like I said, from my side, it seems like there are some interruptions for some reason, but unfortunately, I cannot really control that much. I need to probably dig into this a little bit more at this point, but or not at this point, later. At this point, I cannot do much anyway. But hopefully, you're going to stick around. Going further in terms of economic data, let's have a look. Today, we're getting the mortgage rate, the MBA 30-year mortgage rate in the U.S. Look, the number has been coming out like it has been dropping slowly. Perfect. Primo Israel, hey, hi, nice to meet you here, nice to see you. So thank you very much for tuning in. Look, we can see that, yes, the number has been on decline a little bit, and it's kind of one of those efforts, to boost the economy, like to maybe the market is expecting that we're going to see those interest rate cuts next week by the Fed, and the rate is already dropping. So look. The housing market needs to be revived a little bit in the U.S., in my opinion, because again, it's also a little bit on a decline. We're seeing house prices drifting a little bit lower, but again, it's not a bad thing in a way for the consumer. So it's not really, making the seller's market is now making more of a buyer's market. But we know that there has to be a balance, because when there's a buyer's market, then actually it kind of, yes, you can, as a buyer, you can get good deals, but from the business perspective, I mean, this is kind of damaging businesses, and certainly economic growth is on a slower pace. Anyway, going further in terms of the main economic data set that's coming out today, and that's the US PPIs. Now, look, I talked about the US PPIs already. Let me just remind you, ladies and gentlemen, that I did a video already on our YouTube channel, so you can go check it out. Yeah, I think it'll take me time to find something like that here, but anyway, look. For now, like I said, it's not on TradingView. It's on YouTube. You can check it out. Anyway, you'll find it in there in videos. But anyway, I already did, like I said, a video on US CPIs and PPIs. So check it out in there. Look, my issue is that we are expecting the same number, the year-on-year PPI number to be the same, 3.3. The expectation for a PPI month-on-month is plus 0.3 against the plus 0.9. Now, I don't really think that's okay. I'll go with a bold with a bold statement here and the bold guess that I don't believe that the number will be on the lower side, let's say, that much from the previous plus 0.9 to plus 0.3 on the monthly. Again, I think it's going to be somewhere in between these two. But again, like I said, it's just probably a hint. Now, I keep on saying to everybody, whenever you get a hint, whenever you have like some sort of like, expectation in your head, wait for it. Wait for the number to come out, and then maybe you can do something about it. But just kind of don't rush into the markets, thinking that you're going to be right, and just jumping into a trade of some sort, and then you're going to mess up your whole balance. Look, let's wait for the numbers to come out. Okay, at the moment. Certainly, inflation has been on an uprise here. Let's launch the chart. Let's launch this PPI number here. There we go. There we go. So you can see this trajectory now since mid 2023. We have been pushing higher. Yes, we had a big decline here. Look, I would say was an extraordinary moment in the markets. After COVID, this is when this whole rally started. When we were in COVID times. This is when Ukraine happened, and this is where we started heavily declining here. The interest rates were, we were controlling interest rates. Demand dropped a little bit because everybody was in a way fed up with higher prices and stopped purchasing. In a way, I wouldn't say stop purchasing, of course, I'm joking, but certainly the sentiment got shaken, and people started worrying, and and then you had to drop inflation somehow, and there we go. This was achieved. But what's interesting here, so it was achieved, and we dropped all the way to zero here, a little bit above zero, and since then we started picking up again. Now, of course, the trajectory of this uprise is not as strong as this one, but nevertheless, it's worrying right now. It is worrying. It's we have this target of 2%. We're above that, and it seems like we will continue this trajectory, maybe even towards that 4% level. Which, it's not going to really sparkle well with the Federal Reserve, because again, the Federal Reserve is expected to cut rates in September, which kind of contradicts the whole rising inflation moment. And on the contrary, they would need to be considering maybe not cutting at all. But as I mentioned this in my previous sessions, that it's one of those moments where, okay, have it, enjoy your lower rates, just back off from me for at least for a while, and let me do my job. And I'm speaking, of course, about the Fed, so it seems like it's going to be one of those gifts, to the U.S. government, because again, inflation is picking up. Tomorrow we're getting the U.S. CPIs, so keep that in mind. And the U.S. inflation here year on year is expected to increase a little bit. So and like I said, this path has been like this for some time. We're actually somewhat on the flatter side, right? Look at this. But this is an interesting chart, and if I would apply technical analysis on this chart, and which normally you should not do, but let's say we are, then whenever we have a strong decline like this and then a gradual decline, then we tend to kind of push nicely to the upside. So I can see that my screen is freezing here a little bit, and it's kind of slow on the slower pace here. This is, like I said, this is just annoying a little bit. So apologies for the little lags in my video, ladies and gentlemen. But again, it's just, like I said, it's just I cannot really do much right now. Maybe it's the internet that's jumping around. Normally, we should have a different story here, but let me just double check my connection, because again, we had some issues on Monday, I remember. Right. Okay. Right. Okay. Anyway, so ladies and gentlemen, again, apologies for this. This is not working as I wanted it to work, but hey, yes, it's one of those moments here that for some reason my internet is. I cannot even check that. Anyway, the whole computer is kind of struggling, but what can I say? This is what you get sometimes, and unfortunately, you have to deal with that. But anyway, trying to look on the bright side, ladies and gentlemen. Look, so going further, today, like I said, yes, looking at the PPIs. Very important data set here coming out. Certainly something that, like I said, something that the market will keep an eye on. And speaking about the market, let's jump into the charts very quickly before this whole kind of mess, goes even worse. Because again, at the moment, like I said, it seems like my computer is even my computer is lagging. But anyway, this is what you get. Look, Nikkei 225. Beautiful push higher. Again, I talked about this and I said to you, look, this 44,000 zone got reached, and we reached it on Tuesday and we surpassed it. But the thing is that we traveled back down, so we created a new all-time high. But then we drifted back down and kind of failed to stay above that critical 44,000 zone. And to me, normally I would say that this is more of a bearish indication. Now look, it could be. Don't get me wrong. We're examining all the scenarios, all the possibilities. But certainly we need to be very careful here, and we need to be monitoring this idea maybe of a possible ascending triangle. Now, if that's the case, then certainly we tend to break to the upside. Look, my problem here as well is that we are looking at. Oh yes, leave, please leave. I mean, I'm trying to kind of switch off everything that that could help me boost this stream here a little bit, but I can see that there is a little bit of a lag here on my side. But anyway, hopefully that's not going to damage the video too much. Ladies and gentlemen, like I said, yes. So basically, yes. The problem that I have with Nikkei is that, on one hand, it looks still positive. It's still, there is a chance for this one to drive higher. We could still overcome that 44,000 zone, but at this point, I think up until the interest rate decision from the BOJ, which is, let me just remind myself, is going to happen soon. But let me just remind myself here. So 19th of September, we're getting an interest rate decision. We're not going to get a rate cut or hike or whatever. The plan is to keep the rate unchanged. However, in October, at the end of October, we are planning to see a push of the interest rate towards the 0.75 level from the 0.5. Now, that would be a little bit of a bad situation for the stock market. However, again, it depends on how they're going to play it, because if the stock market, if everything still is okay globally, then I think that the market could just ignore it, thinking that, okay, we knew about this, that's fine, so we have already adjusted. So that's what I'm saying. So it might be the case where it could, the market could still kind of continue pushing higher despite the interest rate hike, which is projected at the end of October. That said, maybe even the hike might not happen, because we have a new government in Japan, which is a new big party in government, which is pro cuts instead of pro hikes. We know that the current prime minister decided to step away this Monday, and we're there, and we're now hoping to see what's going to be the next ruling government and how it will play out. But for now, surely it's the scenario to the upside which I'm examining. I will start looking at some lower levels on this one if we do break this upside line. Let's jump into China very quickly. China is stuck. However, it's stuck in this nice little box here, because I talked about this previously. We got the false breakouts, but we're still in the box. So what I'm looking at here is I'm looking at the prevailing trend. The prevailing trend was to the upside. So according to all the TA rules, we tend to break to the upside, and basically we could see a breakout higher here. But again, that's theory. Let's see if practice will support this theory, because we need a clearance. We need a clearance of this 15,050 zone on the cash index. Yes, if we can clear that, I'll go to the upside. Pretty much straightforward. And I don't need a false breakout actually, like here. I need a nice daily candle closing above, above this barrier. For the downside, the same kind of story, but just I need to see the body of the daily candle remaining below this 14,588 zone, and then I'll consider a bit of a move to the downside. US dollar will be in a bit. Dow Jones Industrial Average. Look at this. Look at this action here. Now, 45,767 against the very close yesterday. Very close to coming to and hitting the new all-time high. Was that correct? Yes, that was correct. So the current all-time high is around the which was reached on the 5th of September. Look, what can I say? That was last week, right? And there is a chance for this one to go higher, but we're currently in a box. We're currently stuck, and we really don't know what we're gonna do here. So, long story short, for now, I'm watching this one. I'm waiting for a clearance of the 45,761 territory. If we can get that move, I didn't put the all-time high. I like this hurdle because, look, this was one of those previous all-time highs, but we did create a new one, but we failed to stay above that. So I'm kind of keeping this as an indication. If we somehow manage to stay above that hurdle, then yes, I'm going to go higher. But at this point, yeah, it's just a little bit of a wait and see moment. The S&P 500 certainly continues to push higher, and this is great. This is wonderful. We are flirting with new all-time highs again and again, and this is of course very, very interesting. However, if you remember, if you watched one of my videos recently, I talked about this idea of a possible rising wedge pattern, and which in a way could be which could be what's the word? Which could be seen as a bearish indication. So, but as several times I said about this, and I said that, look, ladies and gentlemen, while we remain inside the pattern, we could still drift higher. But yes, it's seen as a bearish indication according to all the tier rules, but then a clearance of the lower side is needed. If we do get a clearance of the lower side, then yes, I'm going to go to the downside. NASDAQ is approaching the all-time high, and I talked about this this week, and I'm going to repeat myself again. So whenever the first two, let's say in this case, the first two go and do the all-time highs, the third one, in this case NASDAQ, kind of needs to do the catch-up game. Eventually does reach the all-time high, but then they can sell off. So basically, before, let's say, reversing back down for a bit of a correction, it seemed like they all need to reach the all-time high first, and then we can do a reversal back down. If one of those do not reach the all-time high, and then they start reversing earlier, to me that would be a bigger bearish indication, and we could see a little bit of a more prolonged move to the downside. But hey, let's not over speculate here too much, and certainly let's wait and see. But certainly this idea is working out so far, and we are seeing we're seeing the NASDAQ 100 approaching the current all-time high near the 23,868. I'm really curious if we can hit that 24,000 on the cash index. That would be, I think, great, spectacular. So for now, let's see if that's going to be the case. So ladies and gentlemen, keep your eyes on this. Keep your eyes on the current all-time high. Let's see if we can reach that 24,000 zone. And again, ladies and gentlemen, I would like to ask Primo Israel, thank you very much for confirming. Ladies and gentlemen, whoever's watching this right now, can you please type in the chat if you can see me and hear me without any lags? Because again, on my side, it seems like there is a little bit of a drag happening on the video side, and maybe the sound is coming through okay, but the visuals seem to be lagging a little bit. But then again, maybe it's on my side. But again, so just like I said, let me know in the chat if everything seems to be still okay. If not, then at least it'll be an indication for me that something needs to be done about this, because again, this is, like I said, this is just the way I'm seeing, like I said, the way I'm seeing myself in the other screen, and this is just like, whoa. Anyway, I'm very, very jumpy. But like I said, you let me know in the chat if everything seems to be fine still. So yeah, let's jump into the US dollar now. So of course, we're watching this one very carefully. The US dollar traders are watching the PPIs, the CPIs very closely. And yeah, we're currently seeing DXY inside a descending triangle pattern, something like that. It's not ideal, don't get me wrong, because again, we're kind of missing out on this here area. That there should be a touch here just to kind of, strengthen that idea. Maybe somebody's looking at something like this. Little lag, but audio is perfect. Little lag, but audio is perfect. Thank you very much, Primo Israel. So yes, hopefully it continues. Well, sorry. Hopefully it continues. The audio side part, hopefully it's good, but I hope the video can get fixed. But to be honest, I really doubt that till the end of this webinar that the video is gonna. I think there's some sort of like a bigger issue, maybe some sort of a line network issue or something like that that we're experiencing here. But hey, it's one of those days. It's one of those days. Hopefully you can stick around with me right now. Anyway, coming back to the DXY. Look, for now, like I said, it looks like more of a bearish indication. But again, I need that confirmation break, and not only a break, I need to see the body of the daily candle remaining below that 97.42 zone. If that's the case, great. More sellers could join in. For the upside, well, now that I've put this other more flat downside line, I would say that's an additional barrier that we would like to see being overtaken in order to go to the upside. If that's the case, great, wonderful, more buyers here could join in. So we could then aim for the 100-day EMA. If you think that these lines are way too subjective, which they could be, then you can just stick around with the stick to the EMAs, the 50-day EMA, the 100 and the 200-day EMAs. So if we clear the 50, we could go higher, but then again, look at this. We did that previously 2 times, and this downside line provided fantastic resistance. So why not to consider it again? The German index DAX. Let's have a look at this one. Oh, by the way, in terms of inflation numbers, look. If the PPIs and CPIs come out on the higher side, basically what I'm expecting here, I am not expecting a major rally. I'm expecting like a pop higher, certainly, but maybe this flatter downside line could be more interesting one. Could act as a good area of resistance. But then I think the market will stabilize again, and I think that basically we could see the market still DXY remaining a little bit more on the lower side, because again, look, the market is expecting next week a cut, an interest rate cut by the Fed, and not only one cut. The market now is kind of pricing in a little bit, not much certainly, but a little bit of a 50 basis point cut. So two rate cuts at the same time. It's like you bought a gift to your friend, right? But then decided, hey, you know what? I'm gonna throw in something else, an additional thing. You bought the budget was like 50 euros, right? But then you're thinking, I'll throw in something for another additional 20 euros. So basically, it's like pleasing your friend even more, right? So in this case, I don't know if the U.S. administration is the friend right now of the Fed, but certainly it looks like that something. So if we would see a 50 basis point cut, then I would kind of put it into that category. Anyway, ladies and gentlemen, so yes, looking at this situation here, looking at this picture, yeah, like I said, higher inflation rate, I think that could lead to some higher move here on the DXY, but not, let's say, way too significant of a move. And now let's jump into the German index DAX. So we're seeing a little bit of a move here up and down. So yesterday we drifted lower, found good support here, rebounded from this area near the 100-day EMA, near this upside line, and we're pushing back up. Am I getting very positive here? No, not really. Why? Because it's the 50-day EMA that I need to see a clearance off together with the 23,922. And then if we can get that, do that, then yes, wonderful, great. More buyers could join in. At this point, I am not really doing anything with this, but yeah, certainly it's I'm just observing the price action because again, it could still reverse back down very, very quickly. So for what we need here is a break below the upside line, below this 100-day EMA, and then we'll just kind of take it from there. Jumping into the FTSE 100 very quickly. Yes, we're pushing higher. The 9,250-52 zone here, we surpassed that, so that's great. So we're now looking at some higher levels, and yeah, if we can stay above this hurdle, above this 9,252, then my next target is the 9,358-59 zone here, marked by the current all-time high. As long as this, like I said, remains above this hurdle, I'm still leaning towards the upside. Ladies and gentlemen, let's jump into the Forex world very quickly. Let's have a look what's happening here. AUDUSD beautifully clearing this area here, the box. I talked about this. We cleared the 0.6568. And yeah, it's now resting near the, or I wouldn't say resting, actually trading near the highest point of this year, near the 0.6624, 25 probably, let's round it up here. So 0.6625, this is a good barrier, and if we can clear that barrier, wonderful, more buyers could join in. So ladies and gentlemen, let's keep an eye on this one, and then we'll go from there. Looking at this upside line here as well, this is what's also very interesting, and certainly if we can clear this upside line, then I will, and we basically then we would jump back into the box, and we would jump back into the area here, and we could consider a move lower within the box. So again, it would be a win situation for the bears. However, at the moment, the bears are not in control. It's the bulls, and we are knocking on the door of that 0.6625 territory. Let's see what's going to happen there. AUDNZD, so beautiful. So look, very, very beautiful. I like this pair. It's amazing. We are seeing a nice little retracement. That's fine, which is logical. And I talked about this. I said, look, if we're struggling to overcome the upper side of this rising channel, then, well, actually, you know what? It was a rising channel, started being a rising channel when I put the line right here. Nevertheless, it's still very tentative. It still is something that, you know, we need to be cautious about. So again, it really depends on how you're drawing it, because it's very subjective. Now you see I've just moved the line and it still makes sense. So, you know, but I moved it from the previous here. So why this way? Why not that way? So again, like I said, it's always, you know, whenever we draw something, it's very subjective, you know, it's very subjective. So long story short, for now, the subjectivity is kind of still working out nicely, I would say, because look, we're getting this reversal from the, you know, from the upper side. We're moving lower, and the question is now, can we drop below the 1.1067? If we can do that, great. I'll lean towards the lower side of the rising channel. AUDJPY. Now we are at a very critical spot here. We reached my target, 97.4243 zone. Great. Now let's see if we can clear it. If we can clear that area, wonderful. If we can, most importantly, we can stay above that area, I will go to the upside. I will go higher, and certainly, you know, certainly we could aim for levels which last time we saw here. We could go for that psychological 100 zone, of course, as well. That's logical. Look, there is positivity in this still, right? I mean, there is positivity, and AUDJPY is our risk on, risk off monitor. We're looking at, you know, this currency pair as the indicator of the kind of overall economic sentiment and what's happening, like if there is risk on, risk off environments, and because if we see this one rallying, then everybody's buying, you know, the or you know, the risk currency like AUD, like NZD is accelerating against the safe haven Japanese yen or Swiss franc. So for example, in here we can see that AUD is pushing higher against the Swiss franc. Now don't get me wrong, of course we start digging in deeper and saying, oh, but like, you know what, it's still below here, blah blah blah, 100-day EMA, but there are first indications that we want to go higher. So not saying that everything is nice and dandy in the world's economy, because again, the world is kind of ready to blow up itself up. The world is going crazy, and unfortunately, we cannot do much because us mortals do not decide on anything. You know, it's It's the big boys league, the big politics that kind of that decides on everything, you know. So we are not, unfortunately, we cannot decide, you know, what to do. Like, you know, even though we want to stop everything what's happening, unfortunately, we are powerless because whenever, you know, whenever you get into power, then you become very, very greedy. Anyway, ladies and gentlemen, so yes, going further, NZD USD, looking at this picture here, beautiful breakout here happening all again of this downside line taken from the high of the 1st of July. And if we can stay above this, then great, I'm going to go higher. So the first indication of the upside is happening now here. My only little concern is that we had a moment where the 50, the 100, the 50 was above the 100 was above the 200. Now we kind of went to this down move here, and we started testing the, or should I say, the three lines are almost coinciding with each other. So if we can, you know, if we can see the 50, let's say, crossing below the 100 and crossing below the 200, then maybe. This breakout might not happen. Maybe it just is just a little tease, because then we take a look at the weekly. If we happen to see the weekly candle staying above that downside line, then okay, great, I'll go higher. But at this point, look, it's a little bit tricky. Now, I'm not saying anything. If we suddenly continue to trade below this downside line, will I become suddenly very bearish? No, not really. Why? Because I would prefer actually to wait for a break of this downside line, just to be a little bit more on the safe side. Here, it could, you know, bounce around. It could like just go back down, test this upside line, rebound, push back up, and then maybe break it higher. So just we're trying to eliminate all the issues. USDJPY. We're stuck in a nice, beautiful range. Look at these false breakouts. Honestly, this is just amazing. Boom here, boom there, boom everywhere. And oh, there we go. Sorry. Anyway, look, overall, we're still on an uptrend in a way. We're still on an uptrend. We're still trading above this upside line. Let me just double check something if it's going to make sense. I wanted to say, look, maybe I'm looking at the possible a rising wedge pattern, or I wouldn't say it's a channel. No, there is a little bit of a narrowing down happening, but if it is a rising wedge, then of course we're keeping an eye on the downside scenario. And in general, because I'm not a strong supporter of the US dollar right now, because again, I think that the US dollar needs to be on the cheaper side, because again, you know, US exports the biggest its biggest export, biggest product, the military equipment. So it needs its military equipment to be attractive on the global arena. For that, you need to, you know, make your US dollar cheaper, and for foreign consumer to buy, you know, your US weapons, and that's where the I'm not saying that this is purely the reason why the US dollar is dropping. No, certainly, we have the interest rate, the Fed interest rates, which are affecting the US dollar. But again, it's all like this big nice combo comes into this whole idea of, you know, making your exports a little bit more attractive on the global arena. Anyway, so if that's following this logic, then we could see, you know, USDJPY drifting to the downside. Look, although I'm in favor of this scenario, still I do understand that confirmation is needed. So I need to see a drop below the lower side of this box, which is around 146.69, something like that. We clear that. I'm going to go towards this upside line. If we clear the upside line, then yes, great, more sellers here could join in. Oh, I can see that my stream is struggling to go further. Yes, I mean, there is a little bit of a lag here. I can see, well, not a little bit of it, but still, yes, I'm seeing these issues right now. Anyway, USDCAD very quickly. So we are currently stuck in this little formation here. I mean, we're still finding the 200-day EMA here, shown as the white line, a good area of resistance. Yes, we violated it here, but it was a brief one. And if we look at the weekly, I mean, it was just a false breakout. Okay, on the weekly, you wouldn't have this 200-day EMA here, but just what I'm saying is that this shift here, this move happened more of a, within a week, and we stayed below this hurdle at the end of the week, so below this 1.3879 zone. Look, if we stay below this, I will continue aiming a little bit lower. If we clear the 200-day EMA and we stay at the end of the week above the 200-day EMA, I'm going to go higher. USDCHF, a little bit of a mess here. So I had these upside lines, downside lines here, but I think that no longer they're working. So what I'm going to do here is I am going to keep this upside line only. So we broke below the upside line. As I said to you before, that whenever we break a trend line, we tend to revisit it from the other side, and there we go. We did that. Now let's see if we can drop a little bit more to the downside. EURUSD. What a move here. Look, okay, this pair is going to be a mover. It's going to be a mover today, tomorrow, and on Thursday. If you haven't seen my my Markets.com video on our Markets.com channel on YouTube. If you haven't seen the ECB video, which is right here, you can check it out. Honestly, I think this is what I did yesterday, so hopefully you'll find it useful. And like I said, it's the ECB interest rate decision that we're watching on Thursday. Tomorrow. So we're going to get, like I said, we're going to get the PPIs today, tomorrow CPIs, and also the ECB interest rate decision. By the way, with the interest rate decision from the ECB, we're going to get the announcement. They're going to keep the rate unchanged. That's a fact. And then we're going to get the CPIs, and then we're going to get the Lagarde's press conference. So that's where, like I said, that's how it's going to play out. For now, let's not over speculate on anything, but if they say that they're going to keep the rates unchanged, that's one thing. If they're going to say suddenly that we're still planning to cut rates, then we could see euro actually falling a little bit against the US dollar, or actually maybe strongly falling against another currency like the yen or the Swiss franc. But against the US dollar, because the US dollar is also on the weaker side. However, depends on the CPIs, which are coming out in between. So honestly, if you're trading euro dollar, prepare yourself for some action on Wednesday tomorrow. Thursday tomorrow. There we go. Still living in the past. Then we'll see what's going to happen there, and we'll go from what we're going to see on the economic calendar. So first of all, of course, we're watching what's happening with the press conference during the what Lagarde will say during the meeting and with the press, and then we'll see if they're going to be, let's say, in favor of cutting further. Then, like I said, we could see weakness in the euro. But if they say that at the moment we're not really planning to do any more cuts, then that could strengthen the euro, and we could see a reversal back to the upside here. GBPUSD, very quickly. So very interesting developments here. So I said to you before, and I'll say it again, it looks to me like a head and shoulders pattern, inverted one. Left shoulder here, head, and then it's a little bit, I would say a little bit of a modification. Somewhat of an complex inverted head and shoulders, with the right shoulder being a little bit creepy here, but hey, still kind of doing the job. So let's see if the neckline, the so-called neckline, can be broken, and if we can see a nice push to the upside there. Very quickly on gold. So beautiful rally yesterday, new all-time high. We reached the 3,674 territory, almost 75. And then we retrace back down. So now, to me, the question is that are we gonna? And by the way, look at this. This Fibonacci extension worked out nicely. So I was targeting this 3,664. We surpassed that by a little bit, and we drifted back down. So if we continue to trade below this 100% on the Fibonacci extension, which is measured, by the way, from the low of the 7th of April to the high of the lowest point of April to the highest point of April, and then to the lowest point of May. If we continue to trade below this 100%, then maybe a little bit of a retracement back down could be possible. So that's why I need to put the arrows like this here, and certainly then we'll take it from there. Silver, very quickly on silver, looking at the picture here. Look, Again, this barrier, the 41.45, is doing a good job right now. It's providing good resistance. We need a clearance. We need a good clearance, and not only just a false breakout, but we need to see the body of the daily candle remaining above that area, and then we can, start shifting our attention to some higher levels. Like, for example, let me just put a bigger chart here with more data here. So, for example, we could start shifting our attention towards this area, the all-time high, near a little bit below the psychological 50 level. Of course, don't get me wrong. There's plenty of room here for a move towards this area here first, the 44.22. Let's maybe focus on that first, and we'll go step by step. So keep your eyes on that one. Palladium, very quickly on Palladium. Look, beautiful push back up here. Let's see if we can clear that 38.2 again. If we can, my next target is the 50, and then maybe the 61.8% on the Fibonacci retracement. Platinum is okay. To me, this looks a little bit more bearish than bullish, but again, I need to wait. I cannot really get that comfortable with this idea. I need a clearance of this upside line. If we can get that move, wonderful. More sellers here could join in. Copper is also looking quite bearish. This looks like a bearish flag to me, but I just need a confirmation break. First of all, I need a break of this upside line. Then I need a break of this hurdle at 4.33, and then I'll get even more happy, because at the same time we could, in a way, break this upside line, the one which is drawn from the this long-term upside line, which is drawn from the lowest point of March of 2020, ladies and gentlemen. So yeah, good. There are some good levels for copper to go lower. Let's see if we can, get those breaks. Oil, my beloved oil, and look, this 61.43-ish zone continues to provide good resistance. Support, and if we can get that nice clearance, amazing. More sellers here could join in. So, ladies and gentlemen, if we can get the break here, if we can get that move, I will go to the downside. Certainly, I'm still bearish in oil because, again, OPEC doesn't stop with its production. Increasing outputs. So yeah, I think oil could still drift to the downside. Natural gas, very quickly. Natural gas. Look, for now, it's an interesting one, and certainly if we do get a nice move back below the psychological 3 level, I will become a little bit more bearish. But at the moment, we're above 3, so let's see. Let's continue aiming to the upside. Coffee, my beloved coffee. Nice break of this downside line. Good jump here. We are testing the broken trend line from above. That's a good sign, and now it could lead to some higher levels. However, I don't want to rush into things. I just want to go slowly on this. So if we can clear this area right here, if we can clear this little hurdle, this 391 zone, wonderful. I'll go to the upside. For the downside, a drop below this hurdle, below this 365 territory, which is the 23.6 on the Fibonacci retracement, which I still have on the chart, despite we have violated this peak here. And I'll keep it. I'll keep it there, and I think that still is okay. Look, long story short, I would say this way, that if we can clear this 391, then yes, wonderful, more buyers could join in. Ladies and gentlemen, let's jump into cocoa. Cocoa is near key support, this 7,200-ish, 205. So if we can clear that, in general, this is working out nicely. I talked about this. I said if we do drop and stay below this area, this highlighted zone between the 7,636, 65, and then I'll go lower. And so far, we're on the right track. Wheat, okay, I'm not going to talk on wheat because at the moment there's not much to say here. But sugar, yes, beautiful rebound from that 15.5 zone, amazing. Now, if we can again remain above that 15.5, I think there could be a chance for a move higher. But this way, if you're looking for some higher levels, then basically wait at least for a break of this downside line right here, taken from the high of the 13th of August, and then we'll take it from there. Cotton is looking very good. Certainly, the 65.73 is providing good support. So if we can clear that, I will go lower. But at the moment, yes, we're stuck. I'm not really doing anything with cotton right now because, again, I don't like the fact that it's below this downside line and above this 65.73. So while it remains in this territory, I'm not really touching it. Let's jump finally for the dessert, ladies and gentlemen. I'll be wrapping up this video. Bitcoin. Okay, look, I'll do a separate crypto update on this today. You can find it on the video section. So yes, later on. But look, we are pushing. We're really trying to push back above that. Back above that 112 zone, and we're trying to stay above that. It's difficult right now. It's a key important area of support, resistance, whatever you name it. But also at the same time, we have this 50-day EMA, which is kind of providing good resistance as well. That's shown as the green line here. So if we pass that, amazing. More buyers could join in. We could target, some higher areas. For the downside, I would like to see a drop below the 107,000 here. This low, basically, the current lowest point of September, which is around 107,240, something like that. So if we do drop below that, I'll consider a move lower, because the forthcoming lower low will be confirmed. Bitcoin Cash, the 600 zone continues to provide good resistance. So yes, if we climb back above it, I'll go to the upside. But at this point, you know what I really want to do? I would really like to remove all the lines, but I really like some of them. So what I'm going to do, I'm going to get rid of the rising channel. The rising channel, that's it, no longer needed. It was a good one. I think we need to focus now on something else. I'll keep the downside line here because, again, something tells me that this could happen. Because we broke the downside line, we are now going to be revisiting it from the other side, which is fine. We could be finding good support near the 50-day EMA. That's brilliant. And we could see a rebound back up like this. So, again, unless we start seeing a break back below the 50-day EMA, back below the 100-day EMA, then yes, great, more sellers could join in. So keep that in mind. Looking at this area here as well, 523 is a good area of support as well. 100-day EMA is near that area. So basically kind of a good level to watch here in order to consider a breakout to the downside. Ethereum looks very good here, and yes, wonderful looking at this barrier, this interesting level here. So look, this 4,500 zone is something that I'm watching here very carefully. If we do push back above it, then great, more buyers could join in. For the downside, a drop below the 50-day EMA could do the trick here. If we do fall below the 4,088 zone, I will consider a move lower. Ripple is approaching this area of resistance, this downside line, and yes, we already approached it yesterday and we're testing it. So if we can get a nice clearance of that, amazing, more buyers here could join in. For the downside, look, although we are forming something of a descending triangle pattern, I would say you need to wait for kind of for this one to break out through the lower side of it. So yes, although it looks like a descending triangle pattern, still